Good afternoon. This is Todd Horwitz coming here from the floor of the CME Group in Chicago. And as we continue to track the 30-year Treasury bonds, what do we continue to see is the old flattening curve. And of course, this is one of the reasons that caused some dissent in the last meeting, but this is basically the Fed's fault for creating this flattening yield curve. And of course, the flattening curve will always lead to a recession at the end of the day. And that's when the short-term rates and the long-term rates meet and we get flat, or they actually sometimes will invert. This is actually a general problem, and that's why I say the Fed is wrong, and the Fed has been wrong. It's proven every single time they've ever done any interest rate manipulation that they can't get it quite right. And the truth of the matter is, if the economy is so hot here, then interest rates should be rising, which should be keeping the pressure on the 30-year U.S. Treasuries. And of course, when we look at the Treasuries, we see that they've actually held up fairly well here, keeping rates, the long-term rates low. And I think that's the biggest issue that we've got here. And these being long-term rates, we've got to look for an opportunity, I think, to sell. I think that what's going to happen eventually, and that's why we want to be sellers of long-term bonds, is because at the end of the day, the rates are going to get away, I believe, from the Federal Reserve. I believe they're going to have to raise and tighten too fast because they've been so lax on monetary policy. So if we're going to actually see some true growth in these markets, then we're going to have to see an actual rising of the rates, which is going to push the bond futures down. And I think when you're looking at the levels here, 153, 154 has been our target. Remember, we started at 156, 157, and now we're down here at 153. So we continue to try to work our way down. It just has not been quite as quick and quite as fast as we like. But we're looking now and targeting the 150 level first, but we're actually looking for much, much lower when it's all said and done. But when you have a lot of these things going on, you've got the tax vote going on, you've got everything happening that could have a little bit of effect here. And if we do see a little bit of fear, you could see a quick pop in the bonds. But overall, I think that's just another selling opportunity. In other words, I think every rally is an opportunity to sell. And right now, if we get back to 154, that's a great an opportunity. Now we're in the 152s areas. We look for a rally. Even 153 might be a pretty good spot. But just remember that we've got this overall manipulation, which is creating the flattening of the curve, and that is going to eventually turn the other way. So we look to be a seller of bonds. That's the way I see it. This is Todd Horwitz coming up the floor of the CME Group in Chicago.